You have been completely lied to about market structure for the longest time. In this video, I'm going to simplify it for you completely. This isn't any advanced market structure course, video, whatever you want to call it. It's simply price action, highs and lows. That's it. That's all that you need to understand. So without further explanation, let's get right into the video. So now that we're on the charts, step number one, identifying the bias, knowing where we're at within the market. We are overall bullish. We don't want to be looking for sells, but also we don't want to be looking for overextended areas of point interest. So a lot of traders, they could be trying to buy within this area because this was the last low that broke structure, right? But number one, we didn't close above this recent high right here, so this was only a sweep. Number two, now what we could potentially see is price come back down here, take out these early buyers to then mitigate this extreme imbalance right here and this little order block sitting to the left. And if we play this out, as you can see, they get stopped out. They get faked out. They think they're a terrible trader because they just bought too early. We then fulfill the extreme point interest right here. And now what we want to do is we want to target top side because we took out bottom side of this accumulation. We manipulated. Now we have to distribute to the upside. We accumulated. We manipulated. Now we have to distribute. So a lot of traders, what they're going to do is they're going to get stuck on the lower time frame, right? So step number one is, oh, maybe I'm going to look at the supply right here because we broke structure with the heavy impulsive move. I'm going to take this. Well, if we place out, we can see they get run through and they get stopped out because you are going against the overall bias. You don't want to do that. You need to go with the bias. You need to understand where the market is moving in the higher time frame, because if you get trapped on the lower time frame, you don't see the overall perspective of the market. You're going to lose no matter how good, no matter how perfect the setup looks on the 5, 15 minute, even the hourly. If the 4 hour or the daily is getting tapped in and you're leaving that point heavily and with extreme point interest, that point interest is going to take over. You don't want the lower time frame to fade the higher time frame. Now, if you are trying to trade down into an extreme point interest, say even extreme demand just like this, and you're trying to sell down into it because maybe you're up here, you can do that. But if you're tapping into this point interest and you're leaving with volume, you don't want to be trying to sell within this area right here. So now that we have this mitigation, we know our overall lows. So what I want to do is see this break right here and even a break of this high sitting over here to look for the continuation of this area of newly formed demand. Because still we have all this accumulation to the top side. We've yet to take that out. So now we have our break. We have the fake low sitting right here where people are going to be like, oh, maybe I'm gonna take longs off this area of demand because this was a low that broke the highs, right? Well, that's incorrect because it's not a major low and you still haven't mitigated the most recent extreme low on the higher time frame. So this is all internal and this is all liquidity waiting to get taken out to fuel that move back to the upside. You are not a bad trader, you're just looking at the market in the wrong perspective. Again, oh, well, this one swept all this liquidity right here. We have this demand and we have a break of this recent high right here, right? So I'm going to take this long because all of our confluences line up. This was an impulsive move to the upside, sweeping and breaking structure. This looks like a great trade. We play this out, you get stopped out. Again, you think the strategy doesn't work. You think supply and demand is terrible. Maybe it's just you. Maybe you need to take a step back and actually view the market from a different angle. Number one gets stopped out. Number two is most likely going to get stopped out as well. And again, like I said, if you want to ride the internal points down into external, you can simply by trading simple supplies going down into those external points of demand. So back to the 4 hour and the overall perspective and bias of the market. As you can see, we tap in, right? So this would be your aggressive approach to the market with your stop loss right here and your TP at the high, obviously going with the overall bias. We'll extend this to the right, and now we can start going down to the lower time frame and actually looking for scaling entries or lower time frame confirmation entries. The first confirmation entry can be right here from the low to the end of this imbalance, but what I need first is a break of at least these highs right here. This is not a break. I would not be taking this demand because we didn't fully push past the previous high. But as you can see, it still plays out because you're going with the overall bias and you're getting confirmations off the higher time frame. If this was solely against what the market is actually showing you and doing, it wouldn't play out. But even if it doesn't have the fullest break or the best break or even a closure, it tends to still play out because you're moving with what the market is showing you. And from here, all you do is you wait for new lows and highs to form. Any extreme lows and highs, any protected lows and highs. You wait for them to form to get your next positions. which in this instance, if we fully break these highs right here, you will be wanting the long off this area of demand because this is the last extreme low that pushed these previous highs to the left. We push the highs, we form all this liquidity right here. The liquidity seems like it's getting taken out. We tap into the zone, we get our entry, stop loss at the low, TP at the high of the move, place out, and you can see what happens. As you can see, we move very quickly right away from that zone, and then we hit TP. It's as simple as that. It's literally not hard. I've just shown you so many ways you can get into the market moving with the bias, how to trade internally to go with the bias when you're going against the bias, and how to actually scale in if you miss the beginning of the move aggressively on the higher time frame, dropping down to the lower time frame, getting the confirmation entries. Again, it's really not that hard. People online love to overcomplicate market structure and how to actually trade because they want you to not understand it so they can fish you and reel you in. All right, this is how you trade it. This is exactly how I trade it. It's how all my students trade it. Hope you guys enjoyed this. Leave a like, comment, subscribe. Sorry for the lack of uploads. I've been enjoying life. I've been enjoying my new car. Life catches up. I've been really focused on my one-on-one students and my coaching program. If you guys need any more help in your trading, click the link in the description below. Book a call with me, apply, see if you're a good fit for my one-on-one guidance because I do not sell anything. I offer results. That's it. I'll see you guys in the next video. Hope you enjoyed this.